Hello and welcome to the closing beat, everybody. Happy Thursday to you. Welcome. Hope you're doing well today. We are financial advisors here at Jazz Wealth. And while other advisors are playing golf, going on vacation, staying out of the office, playing checkers, we are playing chess. Really cool discussion with a client today about some real estate tricks that they can do with their IRAs and Roth after finding out what they were trying to accomplish. Very cool. And since we're fiduciaries, even though this means we probably will part ways at some point, really cool to help somebody like that because they got some strong ambitions. And you always got to invest in yourself. We've got wine and wealth here tonight. It was going to be whiskey and wealth, but I've made a change. It's going to be water and wealth because thanks to Charles and Diane last night, y'all wore me out. Met a few clients up on Clearwater Beach, and homeboy can't stay out that late anymore. I need my rest. So it was nice to meet you guys, of course, but we'll just probably lay back, do a little wine and wealth tonight, keep it simple with some water. It'll be at 8 o'clock in the portal. If you're one of our clients, you can dive in there and take a look. See you then. For the rest of you, initial jobless claims and other economic data actually was pretty good today. But good news is bad news. Remember? That's the kind of phrase that's going around the market right now. Good news is bad news because if you get good news about the economy and more job numbers to come out tomorrow, well, that means interest rates will probably stay higher for longer or even go higher than stay higher for longer. And, well, that sucks, right? Nobody wants to see that because that creates more of a concern that we slow the economy down too fast and maybe have what they call a hard landing instead of a soft landing or any kind of landing there at all. Some concerns going forward. If you're looking for that, hey, what's going to be the issue? What could potentially be the issues going forward? Student loan payments. Actually, we're going to talk about that tonight on our Wine and Wealth. We're going to talk student loan payment, a warning. We're going to do, there's a cool tax law that just changed regarding money market funds, so we'll make sure our clients make the most out of that one. But we're also going to be talking about some deadlines that you got to look at, and we'll take a look inside the portal as well. But some concerns coming up here, student loan payments, the impact of that, of course, on the economy. GDP would be the focus there. The shutdown, right? What are they going to do? They're going to shut down. That could have an impact on the economy as well. And, well, of course, the strikes, the UAW and their stuff going on there, as well as a lot of other strikes. There's a lot of strikes going on out there. All of those together are not technically enough to force a recession. So, for example, if you were to say, oh, my God, everybody's paying back their student loans, which apparently a lot of people are on strike. They're saying we're not going to pay back the student loans. And they're smart, by the way. I won't discount that. But if you put all that together, student loans sucking money out of the economy, the shutdown for however many days or weeks it goes sucking money out, strikes if that continues, yeah, it's not enough to put us into a recession, but they are enough to have an impact on GDP to the tune of close to 1%, right, depending on how long this goes. So I've seen some of the really horrible projections and then some of the more probably realistic ones there. So those are all important things we got to look at. As you look around the stock market here today, not a lot to talk about. I'll give you that. Some stock-specific news, but we're all just kind of waiting to see the jobs numbers tomorrow. Remember, good news is bad news. The sort of jobs market right now is incredibly strong. We could see it. I didn't really prepare anything for you today, but you can actually look through and see, well, everything is really strong unless you're in California. Actually, California, when it comes to the unemployment numbers, for whatever reason, I look through every single state. It's nasty over there. Everybody else, minor changes week over week, so not a big deal. And so now we look forward to the next economic piece of information we can get, or news from a strikes or ongoing strike, whatever happens, government shutdown, or who's going to replace McCarthy, all that stuff. But aside from that, it's just the econ numbers. So if you look at the Dow here today, the Dow and the Russell duking it out to try to maintain any kind of gain for the year. Notice that right here where it stopped, that's pretty much the flat line for the Dow, meaning it's not up or down for the year. Right now, the Dow is down 0.08% for the year. It went a little bit negative, it went a little positive, but ultimately people are like, I don't know. What should I do there? If you look at the Russell, it's the same thing, just a nastier decline there. The Russell's down about 0.5%, just a little over 0.5%. Same thing. Every time it got close to going positive, got beat right back down. So it's that, we talk about finding like the mood or the sort of attitude of the markets, the indices as on their own. Well, you can see that's what people are contemplating right now. And so, I don't know. We'll see what happens going forward there. Well, the S&P is actually still up year to date. double digits by just over 10%. A little bit of a support area. We talked about that yesterday. No need to dive into that again. The sort of mammoth one of the year is the NASDAQ. It's up 35% year to date. So it can afford to pull back some more. I think that's probably welcome there. All right, if you look at the S&P, there we go. So the S&P here today, you had a rally off the lows, right? So it started by selling off this morning. It was like, oh no, it looks kind of bad. And then it rallied off the lows. Wouldn't you know it, right in time and right in line with the bond market there. So if we look, there's your 10-year right there. As soon as the bond market or the 10-year started to give you a little bit of a rally, whoop, look, there goes the market. So it makes it real simple if you've been gone for a little bit. The stock market only cares about the bond market right now. That's it. Right? Everything else is like, it's a little bit of noise. What's that saying? There's a saying that the day-to-day in the stock market, the blips that you see in day-to-day, I believe that's the word they use. The daily blips in the stock market are just noise. Unfortunately, it's the noise that most of us can't ignore and will make silly decisions. Well, now you know. The back and forth of the Speaker McCarthy and all this stuff, it's just noise. The stock market wants to know what the bond market is doing. Now, as far as the stock market goes, this whole range thing is working out. Remember that? So if we go back over here, remember talking about this? Everybody says, well, this is the average gain in the market, and I do too. But I like sharing different stats. The average range in October is the greatest of all of the months out there. We're seeing that. October's still going, right? But we're seeing that day to day. If we go over here to the stock or to the actual charts, what's happened in October? Big, wide range days. Aside from today a little bit, right? Wider than normal ranges so far all through every day in October. Well, that's normal. That's totally normal, right? There we go. Go back over here. We know that the range in October from high to low, 7.1% on average. And even if it's not the same number or it just kind of wiggles around, it's still the most. It's the widest range there. So it's funny how that works out. Kind of cool to see that happen. By the way, I just got thinking of something here. Remember where we stand, how the stock market is performing exactly in average, right? So the gray line is the average performance throughout the year since 1945. So we just averaged out every single day and then put that on a chart. The red line is where we stand as of the beginning of September. What happened? Exactly in that gray. It did exactly what the average does. It pulled back right as we come into October. So now you know a couple of stats that we've shared over the week here, but now you know, okay, a little bounce is due, but not a rocket ship rally to just blast off. That doesn't tend to happen until we get closer to the holidays, the weather changing and whatnot. So putting all that together, in addition to everything that we've talked about so far this week, we still have a good recipe for a little bit of a bounce here and see what it turns into. But if day to day is wild and you see like what you saw today, right? 5 minute. Look at this range. Takes from the top of to the bottom of the chart, unadjusted, by the way. So look at this range, top and bottom, the big rallies and declines that you see. It's normal. No problem, right? That's to be expected and also considered normal. Let's bounce over here just a little bit. Not much in terms of a gain or loss today for the stock market. That's because of the bond market. And we can see that. Minor move in the bond market for the 10-year. Looking at the 30-year, minor move there. Off of lows, didn't quite go positive for the day. If you look at oil, I was reading some of the analysts' comments about oil because this is a really, really quick decline. Oil can do this, but just kind of out of nowhere, it's a big decline. There's data and stuff that they all point at there, but I keep seeing the headlines for like the consumer finance, the retail finance, the things that you would read that say, oh my gosh, the economy slowing down has hurt oil demand, right? Let's just take a look here. 1, 2, 3, 4. So the economy slowed down in 6 days? Like dramatically, like that's supposed to happen? Every analyst that covers oil, crude, Brent, and the like have all said, what? This is way overdone. It's just a big overdone move. Every one of them is like, you got to buy it. It's a total buy in this area here, even if you get a little lower. Because they cite, at least Goldman Sachs and Morgan Stanley, they cite the articles of people going, the economy slowdown has caused oil to fall apart. In 6 days? Isn't that kind of weird? If that's the case, we'll have a recession by Monday, right? That's not how it works. We know. We know. We're not falling for that one, right? Kind of cool. Anyways, let's move on to a couple things here, and I'll take your questions because I don't have a lot. I'm not going to sit here and ramble on like I do from time to time. I do have a couple cool things to point out, though. All right, Rivian's in the news today. One of the bigger losers if you're looking on any kind of a scan that tells you that. They're going to raise, what was it, $1.5 billion in convertible notes. Okay, that's normally not such a problem. It will hurt the stock on that day, not a problem. But they just did that. So, one second. So they have a couple billion in sales, but they lose $6 billion almost. And in February, March, somewhere in there, we were talking about it, they did this convertible deal before that for like 1.3, 1.4, something like that. So the shock today is, you need more money already? Oh boy. And this deal here is not as sweet as the deal. Yeah, you see it right in here. It's probably February 28th. If you look it up, I bet that's where they announced it. So that's the reason for the big reversal here today. That's a tough one to invest in, if you ask me. All right, so Costco, we talked yesterday about their sales numbers. Sales numbers come in. We have a 3.7% increase in September sales, taking out gas and then the currency exchange. They always do that. So is that good? Is everything good with Costco? Well, if you look deeper into it, of course, now you know to do that. Food and the cooler section is what drove sales. Everything else was a decline. Not only that, decline in non-food items, which, you know, they got a lot of that stuff there. And the headline makes it sound pretty good. Why did the stock go crazy? Remember the days where Costco would have their sales numbers come out and the thing would just take off? Well, that's a different story, because if you look deeper into it, yep, you can see it there. Here's a breakdown, right? This is what the analysts look at. So this is not mine. I'm just sharing this directly with you. All right. In the blue area, we have total store traffic. Yeah, they track that. That's incredible. So let's go like this, make it bigger. Go like, yeah, there we go. I don't know. Maybe make it see a little bit better. So total store traffic declining, not by much, but it means that number's not a good number, at least to start here. If you look at the ticket sales, when you go buy something, what is the average ticket sale? Is it up or down? Are we buying bigger ticket items, or are we spending money or not? Well, that's actually down as well and continues to decline, so not good for them there. And then basically we're looking at a total of lower customer spend, right? Just all in a whole there, right? So we got declining traffic, declining ticket counts. That's why when you look at today's number, you go, okay, it's great that sales are up, but they're actually declining month over month. Right? So it's very easy for that headline to get the best of you. Don't let it happen. Don't let it happen. Poor Clorox. These guys, now people are giving them the benefit of the doubt. It's a really extended stock. And today they said, oh, well, we were a little off. Remember we had a cyber attack and that stopped some of our production, a lot of their production, it turns out. And our total sales are going to be down by about 30%. We just have to come out and tell you guys that. Big decline here this morning, and people say, well, wait a minute. If their sales are down 30%, it's still worth more than $120 a share. That's where you get your buying in there. Those are people in the know, so staying up with the data there. NEO. I don't know. You guys have NEO? Do you buy this? We don't own it, so I don't follow it that closely. But I did see that they said, oh no, the New York Times actually said this, so this is not from NEO, but they didn't combat it. Normally they'll come out and, you know, companies will say, that's not accurate, wait a minute. They said, we lose $35,000 on every car that we sell. Oh, that's a lot. Right? How much does Tesla lose on every car that they sell? Wait a minute. Nope, they have a profit. Turns out they make a profit. That's big difference there. And lastly, we got to point out here, because this is in like the social space as well. I know people hate that Bud Light thing, and that's still going around and all that. Constellation Brands. So better than expected earnings. They raised their guidance going forward, thanks to Modelo, right? Because Modelo, actually their beer category beat. That was the reason for the beat. Thanks to Modelo. That continues there. People making the switch from Bud Light and whatever. However, if we take that out, they miss on earnings. Not good, right? It's just that. So what do we know? We know people are emotional about the Bud Light thing, and some people staunchly, I'm never going back and all that stuff. Okay, fine. But what happens when all that bleeds off and eventually somehow sales of Modelo start declining? Well, right now we can look at their earnings and go, oh, it's not going to be good. Your wine and spirits category, not so good there, losing money, or at least as of this quarter. So not too cool. All right, I'll take your questions if you have any, and then we'll go from there. The earnings season officially starts next week. Yeah, we'll see. We'll have a lot to cover there. You got some Fed members speaking tomorrow, but you do not have any other earnings or anything. The focus really in the morning is just on the payroll numbers, unemployment rate. It's all lumped into one, but they sort of dissect it into 6 different categories. So you're going to hear average hourly earnings. You're going to hear what was the work week. So what was the work week? Average work week. Expect to see 34.4 hours. That was so 34.4, somewhere around in that ballpark there. Not 40. No, not 40. But that'll come out tomorrow. And let's pop out some of the questions here and see what you got there. Yeah. Okay. Oh, you're late. You say, well, at least you're honest about it, you know? You snuck in and didn't tell me. Student loan issues there. We're going to go over that tonight, but there's apparently a whole thing going around where they're like, we're not going to make our payments. Yeah, you can technically do that. Thanks to the new rules there. So we'll dive into those rules with you. But of course, I'm not telling you don't pay your student loan. I'm just saying there's some people out there that have decided, hey, what if we get together and we don't pay them? Well, you took the debt. You should pay the debt. You read a few articles today that this dip is close to the bottom. More and more and more of that. Yes, you are seeing that. And we know the stats, right? October stopping declines. More than any other month there. You're right, talking about the forgiveness plan under the most recent SAVE plan there. Yeah. CNBC said if the numbers come in hot tomorrow, jobs numbers, they predict we will hit new lows of the year. Do you agree with this? We will hit new lows of the year. Oh, not by the end of the year, just saying, oh, we'll hit new lows. No, I don't believe that. That would be, now I'm sure they're not saying all in one day, but there would be circuit breakers that would stop the market. That's too far for it to fall, given the circuit breakers 5 and 10%. So, yeah. Financial wisdom. Your credit score will be crap if you don't pay. Not for the people that read the fine print and have decided that, yeah, that's what we're going to do. I still don't like it, but we'll go over the fine print tonight, just so you guys know. If you're one of those, I'm not going to say, like, you put your morals, whatever you believe. I might highly disagree, but we'll go over the rules because that is likely to gain some steam there. Mm-hmm. You like Coca-Cola and Pepsi dipping, do you? I saw Pepsi. I did not see Coca-Cola here. Yeah, same thing. Coca-Cola is obviously way more extended than Pepsi. If you like that sort of thing. How about that dividend? No, that's gone. That's a tough one there. But if you like contrarian ideas, that's where you're looking. I forgot you, Cody. I'm sorry. We got the leaderboard over there. I totally forgot. Who do we have in play?
Well, that's because the leaderboard actually didn't change from day to day. We have the same leaderboard as yesterday with Elaine still on top. I have the rest of it right here. Elaine, Ron, Silk, Frankie, and Aloy. Those are your top 5 going into Friday.
I see, because of the not much of a move in the Dow in terms of the closing price there. Okay. Yeah, if you want to play, jazzwealth.com/guess the Dow. That's pretty cool. Dustin, opinion on Caterpillar closing the earnings beat gap. 16, get a little closer to the 200-day. So you can't see it, sorry. If you look at the chart of Caterpillar, and if technical traders we can see are winning, meaning there's a lot of them in there, you think there's a little bit lower for Caterpillar to go then, no? Also, on a really short-term basis, right? It didn't participate in any of the bounce off the lows today. That would bother me. If you have a bunch of stocks in your portfolio and the market sold off and then said, wait a minute, going to start going here a little bit, and your stock didn't, you've got something else going on there. So yeah, that bothers me a little bit. Plus, technical traders, they're looking for just a touch lower there. Yep, I like it. Will the strong U.S. dollar wreck earnings this quarter? Maybe this quarter, but the earnings that were coming up are going to be looking backwards. So if that were the case, and they were already suggesting that there was a problem, you'd have heard about it. But remember, So we are now getting into the fourth quarter, of course, but we're going to be reporting right in here. All right, so that's the start of all of that. And remember, compare the dollar to some of these large companies and where they're exchanging their currency. Not such a big hit just yet. That happened going back last year. We were talking about that, where companies little by little were saying, yeah, this exchange rate. It would just say they're going to expect FX headwinds, and that's their way of saying that. I haven't seen that too much this go around. Yep. Inflation Reduction Act going to cause $10.99 for third-party payment processors. The amount's on over $600. You are getting those. Yeah. Right. Does that bother you? Watching your dollars. I saw all that stuff. That was when I used to pay attention to sort of the politics stuff. But yeah, you'll get 1099s. Johnson & Johnson, thoughts? I don't know what that means. Yeah, thoughts. It's sold off just like every other stock, almost every other stock that you see in the market. That's a problem if you want the market to go lower in a sharp kind of a way, or if you want Johnson & Johnson to go lower in a really sharp kind of way. So it's not for me here, but yeah. Thoughts on buying individual corporate bonds and locking in similar returns to the S&P. Corporates, preferreds, and alternatives right now. Really popular because it's for people that want to take a little tiny bit of risk, right? Not a lot, but you want to take a little bit of risk, but you want to just kind of beat out your money market funds and things. So it's got to be appropriate for the individual, of course, but yeah, they're getting real popular. Corporates, preferreds, and alternatives, which we will soon be able to offer as well to our clients here, after October 20th, I believe. Yeah. Doc's fired up, man. Yeah, it bothers me. $10.99 me for $600. You get my tax money. Yeah, that's pretty much how you said it too, didn't it? All right, I'm going to go get ready for Wine and Wealth here tonight. Lots of good things to talk about, and we'll be brief, of course, because I know we're competing with football season, right? But a couple things we want to point out and a review for the new people that are joined us. For the rest of you, enjoy the rest of your evening there, and maybe we'll see you later if you sign up. Join us at Jazz Wealth, all that stuff. If not, yeah, we'll be back. See ya.